for joining us this evening. The big story this evening, the discussion paper released by the Reserve Bank of India today on who should be allowed to start banks in India. The big talking point in the paper was whether corporate houses should be allowed. Vidhi Godewala and Gopika Gopakumar have the details.
It's not a done deal, but at least the central bank is hinting for the first time since nationalization that the answer to India's capital needs may be to allow big businesses to start banks. In the discussion paper, the RBI admits that giving licenses to small players like local area banks and NBFCs won't serve the hunger for capital. Hence, are big houses the answer, it asks. It points out that only 12% of the world's nations ban big houses from banking. That 12% includes the big heavyweight United States. But some developed countries like UK, European Union, Canada, Germany allow industrial companies to set up banks, but with strong checks and limits.
Well, the RBI has not accepted the idea completely and has its apprehension. It's worried that large industrial houses with cross-holdings will be difficult to supervise. It's also worried that these industrial houses will be able to evade regulatory supervision by rotating funds from one entity to another. And when a downturn hits, all its businesses may be stressed and the bank has greater chance of failing.
Hence, the paper suggests strong safeguards. Firstly, promoter credentials be cleared by investigative agencies like CBI, Enforcement Directorate and income tax authorities. Secondly, the bank should be ring-fenced from other financial and commercial entities in the group. Thirdly, there should be stringent limits on transactions between bank and other group entities. And finally, RBI should be legally empowered to supersede the bank's board where it's deemed necessary. On NBFCs, the RBI raises the question whether all of them be allowed to become banks, but then demolishes the suggestion saying many are too small, too specialized and very lightly regulated.
Finally, etched in stone all over the discussion paper is RBI's opposition allowing anyone with an interest in real estate from getting a new banking license. Any group seeking for new licenses will have to withdraw from such businesses is what the discussion paper says. There will be many who are likely to make a beeline for new banking licenses, but RBI is clear. Its intention is to grant only very few. In Mumbai with Gopika Gopakumar, Vidhi Godewala.
Well, Lata Venkatesh, in fact, is standing by with another aspect of that paper that's gotten focus on indication on promoter holding. Lata.
Yes, in fact, a fairly detailed discussion. At the moment, promoters for the old licenses that were issued in 2001 to 2004, promoters are allowed to bring 40% initially, and they are told that you have to stay locked in for some time, but bring it down eventually to 10%. And any new shareholder, single shareholder, can hold only 5%. With RBI permission, it can go to 10%. Now, the options they offer are you could retain it as it is, or you could say, balance it with the size of the bank. If it's 1,000 crore capital equity bank, then you allow the promoter up to 40%. If it is a 2,000 crore equity, then you bring down the promoter share to 20%. But if it's a very big bank with equity above 2,000 crore, then the promoter be allowed to hold only 10%. These are the options they are offering, not favoring any one over the other. Among the other things they are speaking about is also the minimum capital requirement, whether the minimum capital should be a low 300 crore like now, suitably increased to maybe 500 crore, or set a high minimum of 1,000 crore, or set a low minimum and ask them to scale it up in the next 5 years or so. Again, options, pros and cons discussed, and public opinion invited for each of them. So really speaking, it's a paper open to discussion. RBI has not really thrown its weight behind any one. Seems like it is coming to every discussion point with an open mind.
Thanks, Lata, for putting that in perspective. Let's get a couple of experts in. Joining us now, A.K. Purwar, former chairman of State Bank of India, Monish Shah, director at Deloitte. Gentlemen, many thanks for joining in. Mr. Purwar, I'll start with you. What have you made of this discussion paper? Would you consider this as a fairly significant shift in RBI's stance, particularly with the aspect of allowing industrial houses to be allowed to start a bank?
I would put it this way, this is a very progressive stance which RBI has taken. Globally, it has always been so that there has been some sort of professional touch in the ownership of the banking system, that only professionals were allowed to run the bank, and as far as the industry houses who were owning these banks were not given much say in that. And it was done for the reason that these industry houses, if they have a stake in the bank, they must not ensure that that bank invests in or mostly invest in their companies. So there could be lots of issues there. Globally, there has been a big change. I would say there has been a policy in various different countries, large number of countries, that industry houses were not permitted. But you know, in our country, we have a few industry houses who carry a lot of trust to the people, who have set up significant financial services business. They have conducted themselves very well, in a highly ethical manner. And I personally feel that some of these industry houses need to be encouraged, need to be given license, so that they can set up their shops in the country.
Manish, come in on this. What have you made of the process that the RBI has adopted in putting this discussion paper out? And while it's not taken any stance on most of these factors that it's sort of brought out, it's only saying that these are the pros and cons, and it's left to the discussion paper to figure out what the stance will be perhaps at a later date.
So what I think is that what RBI has done is that it's rightly brought about the issues which needs to be considered before it firms up the policy, and it's very laudable and commendable that RBI is right in the front of it and deciding very proactively that what shape and form this new banking licenses should take. So what's very evident is that while they've not come up with the number of licenses that are going to be issued, they're very clear about the process which is going to be followed. So broad guidelines have been given, and market feedback is invited. Constituents' concerns will be heard, and based on that a view will be taken. And after that as well, there's an external committee which will evaluate the banking licenses. So the whole process will ensure that it's only the best of the breed which will get these licenses. What is very clear is the intent of RBI that they've stated that financial inclusion is one of their mandates on increasing the number of banking licenses. However, we should understand that capital is going to chase only profitable ventures, and financial inclusion, while being one of the mandates, how profitable banks and promoters feel about this particular proposition needs to be seen. At the same time, I think that size matters, and hence the whole call about whether it should be 300 or 500 or 1,000 crores. And the size matters because it gives certain amount of protection against the shocks which a particular company may have, either from its own operations or from that of the economy. Right. At the same time, I think it also gives it great competitive advantages.
Mr. Purwar, on the aspect of non-banking finance companies, there are many NBFCs waiting to convert themselves into a bank. Do these guidelines in the discussion paper bring in any clarity on what the RBI's thinking is on that front?
I would say that, well, again, the RBI policy, the discussion paper which they have circulated, it definitely calls for, it definitely does indicate that NBFCs are going to be permitted selectively maybe to convert themselves into the banks. Here I would like to say that NBFC is a sort of a mid-step to a bank, in the sense that a lot of NBFCs in the country, they have set up branches, maybe 1,000 centers, 1,500 centers, 500 centers. They are doing everything else except deposit taking. They are doing lending to small sector, they are lending to SME sector, they are lending to the housing loan, they are lending to lots of activities. They are also distributing whole host of financial products, mutual funds, insurance, and so on and so forth, excepting deposit taking. So if they want to, if they convert it into a bank, that's a very small, short step for them. Also, most of these NBFCs are regulated by RBI. So I would say that this policy does provide for that kind of position, that RBI would favorably look at some of the NBFCs getting converted into bank, and I think this should happen this time.
Munish, on the aspect of capital requirement, the 2001 guidelines spoke about a 300 crore capital requirement, and now the RBI is talking about anything above 300 crores. How do you think investors are going to be looking at this?
Yes, so what I think in the aspect of the capital is that it will be the business model which will define the capital requirement, and there is no one way to look at this, in the sense that 1,000 crore capital based bank need not be more efficient in deploying its capital than a 500 crore capital bank, and in all probability it's quite likely that a smaller bank might in fact further the interest of RBI in terms of financial inclusion. So it needs to be also understood in the terms of the complexities of the Indian market, where the geographies are different, the pace of economic growth amongst the various regions is different, and hence I think it's going to be a bit more graded approach towards capital, which may well be the need of the hour.
Monish, Mr. Purwar, many thanks for joining us with your perspective on the discussion paper released by the Reserve Bank of India on new bank licenses, and perhaps there is a window of opportunity for industrial houses to get a banking license if this fructifies into actual guidelines. Thank you, gentlemen, for joining us on India Business Hour. Let's move on to another exclusive